All right, welcome back to the channel. We're going to be doing a review of the SP 500, the Nasdaq, key news that's going to be going on over the next month or so. These are things that are going to be holding up the indexes, what's been holding it up, and how the downfall is really upon us. Things we need to be looking at, and how you can expect to be trading over the next few days and weeks as well. However, before we go any further, I ask that you do two things. Consider smashing the thumbs up button down below if you get anything out of this video, and then as well as subscribing, because I'm giving you updates every single day regarding the news coming out around the economy, how you should be trading, and things you need to be looking out for. I'm giving you the catalyst behind the day's movement. Futures move the market. So if you're wondering if your stock's gonna go up, down, or sideways, these are the videos you need to be watching so you get a good grasp on what is going to be happening every single day. Let's get to the video. Now, like I said, I'm gonna be going over some longer dated information, but I actually wanna go to the charts in the middle of the video, and I wanna focus on some of the news and things like that right now. Now, going into some of this data, I wanna go over some key points we need to be looking at. Now, if you haven't seen, Biden made a statement this past week regarding the inflation from Russia specifically. He's saying that most of this inflation, about 70% of it, is stemming from Russia. And people would think that this would give you a good reaction on the economy, a good movement to the potential upside. What we're going to be looking at are key stats that are not changing, that are not false. These have been occurring over the past year specifically, since the beginning of 2021. We can look at CPI, PCE, and core PCE and core CPI. And this is going to give you your best perspective of the market. Now, CPI is the big boy. That's the inflation that we're looking at right now. And as you can tell, it's been seeing massive spikes in the beginning of the year, some stagnation throughout the middle, around when we get to September. And then after the fiscal year ended in September, obviously it started going up once again, but this time almost as fast as before, and you're seeing a steady growth cycle. This was more of a J curve, immediate and then sideways. This just seems like it's starting to rise. I'm going to get into this exactly why in a second, because this is very important, and we've seen this happen before. But you see you're rising, and if you really want to blame this on Putin, you would have to start blaming him about right here when you're at about 6.5 to 7%. I can say that yes, the conflict with Russia and Ukraine is definitely spiking the inflation and prices of gas and maybe even food products. However, if we're really looking at what's going on, it's not affecting America as much as it's affecting the EU and other countries. Here in America, we are operating at a different level. And if you look at the production levels that's coming on globally, it's really coming back down to the EU that's going to be getting hurt. And that's why they're already talking about them being into a recession very soon. Yellen just said it the other day. But as you can see right here, if you want to blame another country, you can't do it, because then all this is just irrelevant in what he's saying. So yes, we all understand they're lying, yada, yada, yada. That's what's going on there. However, I want to go over the Fed rate decision coming up, and I want to show you a chart here. So you can see over the past roughly 2 years, it's been nothing but, the 0.25, no interest rate decision. It's been stagnant, stagnant, stagnant. And then you started to see them talk about the change, and it was going to be coming very soon when it was announced in January. And then obviously, since January, we've seen the market have a little bit of a tumble, come back up in March, and now we're back in May, coming up right now, basically 2.5 weeks. And this is going to be interesting, this point right here, because we fully expect this to rise once again. They're saying it's just going to be a 0.25 hike, but there's a lot of hype and potential behind it being a 0.5 hike, which would make this be a beat to a 0.75, which would be detrimental. Now, if we come up and look at really what's going on here, let's just take a quick look at this. Now, what I want to do when we're looking at this chart, we're going to go and look at the yield curve as well. This is a chart we mentioned the other day, but we're going to take a look at this chart as well, specifically 2018. So what we're going to do is come back to this, and we're going to go over this. Now, if you remember going into Trump's presidency, it was highly likely that we were talking about a recession, the yields were inverting, things like that. And you could see going into that in 2018, you started spiking on those, they had to start raising those rates. You ended up topping off at roughly 2.5% right here. And that's when you started going up. And then, you spike out right here, 2019, roughly into, middle of the year, give or take there. And you start coming back down through 2020, and then it really falls off a cliff once, COVID hits the fan and everything like that. Now, going back, well, what happened here? So we're going to look, this is a 2008 when you hit that level, and you can see all throughout 2018 what's happening. When they're raising those rates, You are flying up. Yields are starting to get to that curvature point, right? And it makes sense. As you are raising rates, yields tend to curve. They tend to move like this because you're hitting inflation. That's just what happens. So all throughout that time, you are in this channel to the upside. Now, this is where things get really confusing for some people, and I think people are just disconnected from reality. Now, if we go back and we look at what's happening now, we can see that, yeah, we're clearly in this trend. Yeah, there's no argument. You've been in this trend. But the key focal point here is yields haven't really been moving based on interest rates, right? So if we look right here, that's the bottom. We're going to go back to this chart right here. You can see 2020, guys, there's nothing going on here. Yields are not moving based on interest rate decisions. They are not moving based on rate hikes. You get one rate hike here, and look how much those start to spike. Just off of one rate hike, look what happens. You go from here, 0.8, all the way almost to 1, which means a full inversion. Now, could you get higher than this? Yes. That has never really happened to that large of an extent. You've seen it happen a few times, but it's a very small percent, and then it comes crashing down, which that would be a very bad and detrimental indicator if that did happen. So the point I want to prove here is that you are slowly starting to see a spike, which they've already said 6 to 7 hikes total this year are coming. That is happening. So let's say a minimum. Let's be pessimistic about it and say there's only going to be 5. There's only going to be 5 hikes. And you continue at this 0.25, which is the minimum. I mean, that just tells you you're getting back to around 2.25, 2.5. If that happens and you start to move at this rate, just like this, how you moved way back when, what do you think is going to happen? As you were rising in this clear channel, this is from one rate hike right here. Where is the ceiling, people? Could you get over a yield inversion? Could this go ballistic? The last time you really had a complete yield inversion where it just went bonkers was back in, 06, 07, which led to the terrible 08 years, right? And that's where things started to get crazy. So you need to be looking at what's exactly going on here, but looking at how this is moving, if more rate hikes hit the fan, you can guarantee things are going to get interesting here. Now we're going to look at the S&P and going to look at the Nasdaq, and they're both going to tell you interesting stories based on what's happening with these charts. Now, as you get in here, if we're looking, you had a nice descending wedge. You broke out of it. Great run. Great run. You had a level of certainty. Let's mention exactly what happened. You started to move on the upside. One, I will say you moved up when yields were inverting, which is, you've seen this happen. We mentioned this in the previous videos as well. Sometimes you react initially based on certainty in the market. You're like, okay, we know we're getting a hike now, but it was the minimum. This is good news. They're operating at a minimum. They're not going to try to screw us over the Fed. And you shoot up, but then guess what happens? It just straight shot back down. I mean, you're coming down this is the daily chart. Look at these candles. Immediate just engulfing on all these candles to the downside. Every bullish candle you were getting engulfed straight back down within a day or a day and a half, or right back down to the downside. Now, if we look at SPY, you could say this is still operating in a bull flag. You're trying to push back up. However, if we look at the Nasdaq, it is clear looking at this chart, which is the Nasdaq. It's the same wedge that happened there. You can see you are breaking through those flags. You are invalidating that trend. So if you wanted to say this was a flag, that was your flag right there. You broke through it, you tested it now as a resistance, and you shot down. And you're actually getting very close back to those March lows, which we were expecting to be hit within the next few weeks, around 13 flat. That's going to be detrimental for the market. That means really bad news for tech and growth overall, which is what everyone's really buying right now. Tech, growth, your favorite big names. That's what everyone's talking about, and they're getting slapped. That's why when you're looking at something like Amazon, look at this thing. You went all the way back up to roughly 3,400, and then bam, you're back almost below 3K. And when this gets back below 3K, you're going to come and test that 26, 2,700 once again. So coming back to the Nasdaq, I just have to look at really what's happening. You start to get these bounces, but again, look at these candles, a complete bearish engulfing channel, taking away everything bulls are trying to create for themselves in a day. And you're not getting any of that pullback to the upside. So when we come and look at SPY, I'm targeting for this week around the 42.5 range, going over to the actual SPY. This is the S&P coming to SPY. I'm targeting a break of this range right here around 435. I think you're going to be tested in a hurry. And I think you're going to be targeting the lower range of 428 to 425 in a hurry as well once that area starts to break. But again, you're seeing this type of wedge bull flag you're trying to operate in. But again, every time the bulls make a move to the upside, the bears operate stronger and with more volume, which tells me that they are remaining with all the strength. So I have to stay on the side of the bears right now, especially in the short term. Now, last week I started to mention oil, and then this week I'm starting to mention gold. We're going to look at the big channels going on here. These are opportunities in the market. These are your hedges for the upside. This is things you like to see happening right now. Look at oil. We called it out. You came down to your support, about $93 a barrel. This is U.S. crude. If you want to look them up, it's USOIL on TradingView. Look at how you're breaking out of this trend. You are breaking and starting to push right back up. You are seeing this more threats coming out of Russia towards America. Oil will continue to operate bullish. Now, when we get into the territory of next really big runs, you got to start breaking over these highs, but I think you're going to start testing 115 a barrel once again. If you're looking at stocks for these, you're looking at USO. This is the one we talked about. Boom, you came in this buy zone. You shot right back up. You're at almost 80 bucks. You know, this is already happening. This is the one that Warren Buffett has, Oxy, OXY. You're getting ready to break out of these high ranges of 63.50, 63.40. You're starting to push more. Look at Exxon. These are all very, very bullish. This is what's happening with the market. The money's rotating back into these commodities, and nobody is talking about it. Look at wheat. We can even look at something like a commodity like wheat. You're bouncing off those bottoms. Once again, we're already, you can see the drawings from the other day. We're joking around about rockets, but look at what's really going on. You're pushing back to these ranges, going into uranium. I mean, if you really look at what's happening with the market, all the commodities are thriving once again, and you are sitting back at this bullish level. Uranium is about to absolutely explode, and it looks identical. It looks identical to gold. Looks like a pure cup and handle is forming right here. Now let's look at gold. This is the big boy. This is the one we keep mentioning. XAU USD. We mentioned it yesterday. Look at this formation of what's happening. Clear cup going on, coming down, your handle, and you're getting ready to absolutely shoot off. And when this happens, you're going to see a very large pullback, specifically when it comes to a risk off market. You're going back to risk on. You can already see it happening right now. People are getting and deleveraging from the bullish trend of the market right now. I don't mean to be a bear. I'm just coming at you with the truth and how the market's moving, and hopefully to help impact and give you a good indicator of what the market's going to do. You need to do your own DD, do your own financial due diligence when it comes to the market. I'm not responsible for anything you do, and I'm not responsible for any of the gains you make. But hopefully you get something out of this channel. More content will be coming. Don't forget to like. Don't forget to subscribe. More videos every single day. Educational video will be coming out tomorrow. And we are starting the 5K challenge as well to show you how we're doing options and looking at that as well with this market. And can we grow during a bear trend as well? As always, have a good one, traders.